Hi everyone and welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and this week we're going to dive into the setup to a pretty big week next week. For those of you that don't know, we have the very first meeting of the Federal Open Markets Committee. That's the policymakers in the US, where the new Fed chair is going to start his term. He's going to speak for the first time about his agenda, given the current environment the whole market's in. And what's obviously the key takeaway here is that we've got a very interesting setup that we're going to on this week's Squawk. We have core inflation data out of the US rising again. It's in fact the highest that it's been since October. And it's a very interesting thing because as we've spoken about previously in Squawks, the whole mandate of the committee, the policymakers in the US, is to really walk a tightrope between growth and inflation. And in a recent world where we've seen inflation do nothing but rise since February, it kind of sets up this expectation from the market of like, all right, how are we supposed to see monetary policy easing if the one thing that usually happens, which is inflation, is the net result, right? And that's where it all comes back to interest rates. Like, how is a market expecting interest rates to occur when inflation's still continuing to move higher? We've continued to see the job market remain pretty steady, growth remains steady. There are some potential issues there, but nothing that's showing up in the data just yet. So it really pushes this whole equation of like, how are we going to see relief in the market, right? Particularly with consumer sentiment being at all-time lows, as we covered about 2 weeks ago. Now, this is where it gets pretty interesting when we look into the data. Now, this is a chart by the CME Group, which looks at the probability history for the markets on how they see interest rates playing out into the end of the year. Currently, the market's still believing that rates either remain the same or potentially go lower, but there's a higher emphasis now more than ever on a rate rise. We did see these expectations spike in March on this contract, but now we're really starting to see a trend higher. And this kind of does feedback quite nicely into what we're seeing in markets. We're seeing a lot of capital risk leaving markets like crypto, even the likes of gold. And even the equity markets have shown some shudders in recent times. So it really sets up this whole equation of, with the new Fed chair coming in, will he take the approach of what he said initially, which was that he was going to essentially look to reduce interest rates, shrink the balance sheet, still be able to maintain growth, but in a sustainable way without increasing inflation? That's the million-dollar question right now. Will he come in and do what he said he was going to do prior to getting the big job? Really big week next week. I recommend you put it on the calendars. We'll be covering it next week in full detail as well. But all in all, we have seen crypto markets continue to slide this week again. Not a double-digit week loss like we did see last week across Bitcoin and Ethereum. But Bitcoin holding steady and Ethereum down 5%. But that's it from this week's edition. We'll catch you next week.